And right now, folks, as we do each and every Monday at 3:15 p.m. Eastern Time, we're going to talk to our man Steve Rhodes. And folks, you can check out Steve's outstanding newsletter. Hit that newsletters tab on the front page at TFNN.com. You'll see Mastering Probability by our man Steve Rhodes. Folks, remember, every newsletter we have comes with a 30-day money-back guarantee. When you subscribe, you gain access to Steve's newsletter. It's $149 a month. You can add savings on the 6th month in the year, and they all come with a 30-day money-back guarantee, and you get some awesome webinars. And, man, we got a market with some movement right now. Steve Rhodes, good afternoon.
Good afternoon, Tommy. Great to be with you. How are you today?
I'm doing fantastic, man. We got quite a market, Steve, from where we were on Friday and last week, this gold market. And, boy, we had some good football out there this weekend. But yes, we got quite a market. What are you seeing out here, man?
Well, first, we're going to have good football tonight. Tampa Bay against Detroit Lions.
Keeps going.
And we got a Game 7. In the pennant series, so it's going to be a great night of sports out there. So I'll try to take a nap before all that happens. But in the market,
right, I know.
This is a snapshot here, Tommy, as a 2 p.m. I don't think we're that far away. I've got the S&P up 76. I think you said it was just up 71. So this snapshot's pretty probably relatively accurate. But the question I've got at the bottom is: were there any clues on Friday that this rally or a rally was a likely outcome? And the answer to that question is yes. And it's called the Spot VIX Index, and it's referred to the one-day rate of change, which is what this chart here is showing. So one-day rates of change that are less than or below minus 10%, they typically generate what's referred to as an initiation to higher price signal. And those are the green arrows on this chart. The top panel of the chart is the S&P 500. Below that is the actual Spot VIX. Below that is the one-day rate of change, where I keep track of whether it's a plus above plus positive 10% or below a minus negative 10% out there. And Fridays was minus 17.9. So it typically leads to higher price, and that's what we're seeing here. It doesn't tell us what degree of higher price, just simply an initiation to higher price out there. Those were the green arrows. The blue arrows here show us what happens when we have a Spot VIX index that has a one-day rate of change above plus 10%, which we typically find generates an overnight rally in the ES Mini. It's either a rally, counter trend move, a bounce, a bottom. But most important here was we had a one-day rate of change below minus 10%, and that's a signal that we should see a rally out there. We also like to watch the Spot VIX Index in relationship to its 50-day exponential moving average. And if you look at the very left-hand panel of the screen here, lower left-hand panel, what you'll see is that's got the Spot VIX Index, and the 50-day exponential moving average is the blue line that's there, currently printed at 1738 out there. This chart here, Tommy, takes the S&P 500, and it takes the chunks of time how the S&P traded when the Spot VIX is below the 50-day exponential moving average. That would be by these green rectangles, squares, or what have you. And when how the S&P trades when the Spot VIX index is above the 50-day exponential moving average, and that's identified in the yellow rectangle and boxes out there. So Spot VIX is a really great tool, and those folks that listen to the Trader's Edge show, hosted live at 11, know that we talk about that when those signals are present. I'll go back real quickly here. When I took this snapshot, and I just noticed it while we were chatting right at the beginning, the Spot VIX had a one-day rate of change below minus 10.8%. So we could be getting a second signal today. Now, I've studied this in the past, and two-day signals don't have any more meaning than a one-day signal out there, but we could get another initiation signal move today. Any questions about what I shared so far?
No, but I like those charts in terms of where it was under that 50-day and over. Yeah, that is quite a chart, man. And I always am looking at the VIX, and boy, it's quite a volatility suck out, man. From what were we approaching? I have it up here as you were talking about it, 28.99 on my charts on Friday, and here we are at 18.48. So yeah, no one's paying for premium today like they were on Friday, and that usually says something, as your charts say it for sure.
For sure. So I like to go from the VIX into the S&P 500. I like to do that via the ES Mini. Here we've got the daily, weekly, and monthly time frame. The daily ES Mini still has what I refer to as a Rhodes momentum indicator top, and I think that price is likely going to go target the top of its profile, which is at 68.1225. I'd say that especially if we get that additional one-day rate of change of Spot VIX below a minus 10% out there. But the most important thing, perhaps, about this ES Mini and its daily daily time frame is that a new profile formed last Wednesday. And this profile, it's the dashed green line. So you can see the dark black number at 66.2185. That's the bottom of its profile. The top is at 68.12. This profile wrapped around the prior profile. And what that typically signals to us, Tommy, is to prepare for a consolidating market out there. So we'll see if that's what unfolds. The daily has a top. The weekly has a TD9 count top. And only a close above the high. The high of that, I believe, is going to be the 68.1225 level on Friday would negate that topping pattern. So I've got a daily Rhodes Momentum Indicator top, a weekly TD9 count top, and we are in wave number 7 on the monthly time frame. That wave number 7 can't be confirmed until the end of November. So we really would be paying attention mostly to the daily and the weekly time frame. If I go take a look at the equal-weighted ETFs, so I'm going to go from the ES Mini into equal-weighted ETFs out here. And the equal-weighted ETF for the S&P 500 is the RSP. Typically, the equal-weighted ETFs point the true direction of the market. Well, if you look at the daily time frame, we've got a Rhodes Momentum Indicator top, only a close above its all-time high. I don't have that price point here, but it's about the 218 area, I believe. No, I'm sorry, about 192.50, somewhere right around there. So we've got a daily top. We've got a monthly. Now, here's what's interesting about this is even if we get a short-term pullback, the signals that I'm seeing, and it's really shown here on the monthly time frame, we have a confirmed A to B equals CD pattern to the upside. That should take us into the 218 area. So even if we do get some type of retracement, maybe even a correction, even if it's a couple-month correction out here, the charts are suggesting that they will continue to make that A to B equals CD pattern to the upside. And the equated ETFs typically point the direction. And the important thing is to understand there's still some tops that are present out there. So we're not out of the woods. If I take a look at the Dow, which, as you pointed out, has had one heck of a move out here, right now on a daily basis, price is trading right up into the top of its daily profile. And that's at 40.20. I'm not sure exactly where we're trading right at this moment in time, but we have a daily Rhodes Momentum Indicator top. We have a weekly TD9 count top, and we are in wave number 7 on the monthly time frame. So all of this still suggests caution. I realize that, hey, we've got these initiation and higher price signals out there, but we still have to take out the topping patterns in order to put on our party hat, so to speak. The Dow itself, if I switch over from the ES or the S&P to the Dow is up against the horizontal trading range. That's here at this 47,296 level. That can be an area of resistance. So again, we're not out of the woods here. So that's on the equity markets. If I switch real quickly to gold, gold's having a heck of a rally, but Friday generated a Rhodes Momentum Indicator top for its daily time frame. And this Friday is going to complete a TD9 count top, and the monthly chart also in wave number 7 out there. So the charts for gold are saying caution. In fact, if I take a look at the daily charts and weekly charts for gold, silver, and the GDX, each of them have topping patterns. And on the weekly time frame, they also have topping patterns. So this is a time, in my opinion, even though everything looks great out there, technically speaking, this is a time of caution.
Patience, caution can be a good thing. I'm thinking a lot of the same thoughts, man. And every day, and then you wake up and gold's up $200, right, Steve? But no, and Friday was quite a day. I feel like maybe that was the first crack. We will see. Yeah,
exactly. We'll see. And look, if we get these tops get taken out, they're going to tell us that we're not even close to the top. But time will tell.
We just let those charts talk and squawk and walk and talk to us.
There you go.
Steve, great information, man. Always appreciate it. Folks, check out Mastering Probability, 30 days money back guarantee. And Steve, we'll check out the program tomorrow. Have a great night, man.
Thanks, Tommy.